So, Scott, given that we're in this crazy environment where we don't know necessarily where things are today, what they're going to be tomorrow, what should clients be thinking about? What should they be taking a hard look at? And what kind of things should we be talking to them about?
This is a perfect opportunity, Maury, for people to take a look at their wills. Everybody should be going back to their planners and taking a look at what the will provisions say. Easy example. There could be provisions in the will that just completely don't work anymore. One example is, let's say you have a husband and a wife, and they have a will that's set up. And the will basically says, I leave the maximum amount that won't be subject to federal estate tax to my kids, and everything else goes to my wife. That, right now, based on current law, would mean that everything went to the kids and nothing would go to the surviving spouse in that situation. Obviously, a horrible result, and not anything that anyone intended, especially if you have like a second marriage here and the kids are from the first marriage. Another example could be sometimes people have these wills set up where it says, I leave the maximum amount based on code section blah, blah, blah under the will, a credit exclusion amount to my kids, and then everything else goes to the wife or surviving spouse. In that situation, that would have the intent of having everything go to the surviving spouse and nothing to the kids, because right now under current law, if somebody died, there is no exclusion under section blah, blah, blah. It's not in the law anymore. So everybody really needs to go back and take a look at their wills and see how these provisions are written to make sure that we don't have any unintended results that can't be fixed.
So things that were really intended to protect people and written a certain way with the intention of protecting kids or protecting surviving spouse can be completely undone because of the change of the law, and you get totally unintended consequences.
Absolutely right. The most important message we can give to people is right now, in case, God forbid, something happened, you have to go back in there and review your documents and make sure that they still work.
And most of these things can be fixed in some way so that they work no matter what the consequence will be.
Oh, very easily. I mean, an easy fix in our example is just to say, if I happen to die in 2010, all the things that we just said shouldn't happen, and here's what I want to have happen, and just articulate it in English. And that's what we've been doing.
Yet 95% of the people are probably walking around right now with documents that don't necessarily work.
Absolutely. It's very possible. Some of them will work, but some of them will be just subject to interpretation, possibly by a court, especially if you have the situation we talked about a second ago with kids from first marriages and second marriages. But there are certain situations that are a bit more subtle and get more complicated that really also need to be looked at. I'll give you an example of one thing I'm working on right now. We have a situation where we have an older business owner individual who's married for the second time, kids from the first marriage, and his two goals are, he wants to make sure that if he dies first, his surviving spouse, who is much younger than him, wants to make sure that she's taken care of. She has adequate cash flow, and she won't want for anything if he passes away first. But the second piece of this is his kids run the family business, and he wants to make sure if something happens to him that they get control of the business and they get to run it. So those are the two most important things for him. Under current law, very simple. He dies, the assets go into his estate. We created an option agreement where the kids had the ability for a price based on appraised value at death to go in and buy the business interest. Works perfectly in this situation under law that was in effect in 2009. Because if something happens to the business owner, I get to pass everything to the surviving spouse because I have the unlimited marital deduction under prior law. Since I got step up in basis, the kids were able to purchase the business at no adverse income tax cost. So I have a win-win situation.
So no estate tax, no income tax, cash flow to the surviving spouse, and the business in the hands of the next generation that's actually running it.
Exactly right.
Perfect plan.
Perfect plan. And right now, it's a total train wreck if something happens to him. Because now what happens? He passes away. I have no step up in basis. Let's say I have a business interest that's valued at $25 million and has zero basis. Now the estate goes to sell it to the kids, and there's all of a sudden a $25 million gain that wouldn't have been there under prior law.
So while there's no estate tax, there is a tremendous income tax, and all the money that was supposed to be available to pay the surviving spouse is now cut maybe in half.
Absolutely.
So something that was well thought out, a sort of home run type of plan, because of these changes in the rules, have completely thwarted the entire intent of what was supposed to happen here.
Right. And since we don't know what's going to happen in the law, we really have to go back and look and try to plan for this. And we may not have a perfect solution, but you certainly want to go back in there and look and see, maybe we don't want to exercise the option if something happens to our business owner. Maybe we need to think if there are other alternatives to make sure that what's important to our client can be effectuated. Meaning maybe there's another way that his surviving spouse can get taken care of from a cash flow point of view, and the kids can still run the business. But we'd have to look at alternatives, and then again make sure that the will and the other supporting documents can speak to this flexibility. And if we have law that has step up in basis in the normal estate tax system, have it function one way, and if that's not the law, maybe have an alternative.
So the moral here is sitting still is really just not an option. You have to go back, see what you're sitting with in the context of where the law is today.
That's correct. So even in the basic situation, just with a husband and a wife and a very straightforward, set of assets, or the complex where we have business owners and some more interesting creative planning mechanisms to achieve our clients' goals, everybody needs to take a look at their wills and their estate plans and make sure that the planning is covered based on any eventuality.